Hey, what's going on, guys? Today I want to cover the basics of life insurance for you. We'll talk about just kind of what the purpose of it is, two of the main types or categories of life insurance, and then some factors to consider to figure out if life insurance is something that you should purchase. All the other topics I cover are more geared towards impacting you. Now, the interesting thing about life insurance is that at the end of the day, it's not about you. It's about protecting those that you love, those that are depending upon you. Right. So I would say that the main purpose of life insurance, there's a lot of nuances, but the main purpose of it is to protect your spouse, partner, your kids, if you were to die early, right? Chances are they're depending upon your income, either entirely, or at least in part. And so by purchasing life insurance, when you pass away, whoever you list as a beneficiary will get what is known as that death benefit. The acronym I like to use to remember what life insurance is there to cover is LIFE, L-I-F-E. Keeps it pretty easy, right? So L stands for liabilities, right? Any debts you have. So if you were to pass away, part of that life insurance money could go to paying off your mortgage, car loans, credit cards, anything of that nature. I stands for income replacement, and that's, in my mind, that's really the primary purpose, right? Because if you're in your 20s or 30s and you just got married or just had a couple kids, you've got a lot of time in front of you. With those kids growing up in the house, and it'd be beneficial for your significant other to, at least for a time, not have to stress about the money issue and be able to just focus on that transition, right? F is going to be final expenses, okay, or funeral, it's not something many people like contemplating, but but it's reality, right? We're all mortal. We're all going to die at some point. And so, having a plan to pay for that so we're not negatively impacting those we love is just the loving, responsible thing to do. And then E is education. So if you have kids and you wanted to fund their college education or any education, then you could consider having a portion of those life insurance proceeds pay for that. Okay, so let's say you've decided you want to buy life insurance to protect your loved ones in the event of your death. Next question is, how much life insurance should you buy? A rough rule of thumb is 15 times your gross annual income. So if you're making $50,000 a year, 50,000 times 15 works out to $750,000. And you might think, whoa, like $750,000 of coverage, that's a lot of money. Like, I even heard people say, like, oh wow, I don't want them getting rich when I die. All right, wrong mindset for one, but two, 750,000, honestly isn't a ton of money when you think about, okay, having to pay off mortgages, auto loans, credit cards, student loans, providing that income, for the next, 20, 30 years, however you want it, work things out. But that's just a rough rule of thumb, 15 times your gross annual income. I mean, if you want to do a really detailed calculation, you can plug in all your specific factors. I'll put a link down in the description for you guys that'll have a calculator that will allow you to get a more detailed calculation. But I think you'll find that, at least I have, 15 times your gross annual income would definitely get you pretty darn close to the number you're looking for. There's two main types of life insurance. On the one hand, you have term, just think temporary. And then on the other hand, you have various types of permanent insurance. Whole life, universal, variable universal, etc. I'll cover those in another video. But for now, just know there's two types, term or permanent, okay? The term policies are good for a set length of time. You would purchase, either a 10-year, 20-year, 30-year, for example. And if you die during that term, that length of time, then whoever you designate as your beneficiary will receive that death benefit. So you might think, oh, well, what happens if I die outside of that period? Well, yeah, unfortunately, your significant other would not get that death benefit, but you need to think, well, what's the purpose of insurance? And the purpose is to protect against, catastrophic financial ruin. And so in this case, what you're insuring is, essentially your income earning potential, right? If you pass away, you're no longer bringing that income in to provide for your loved ones. And for the majority of people, that risk is greatest, when they're young for a certain amount of time, maybe age, 20 to 50 or somewhere in there, right? Because early on, chances are you have more debt and, less income to cover it. And as time goes on, you've slowly been paying off those debts, and the kids, right, you're starting off, the kids are young and got a lot of increased expenses, but once the 20, 30 years goes by and, hopefully the kids are out of the house at that point, you don't need as much income to cover that. So essentially, in my opinion, term insurance, what it does is it protects you during those years where the risk is the greatest, but then, like, once it expires, if you've been planning right, you've been setting aside assets for retirement and whatnot, then you no longer need that insurance. I don't think anyone would complain like, man, I was paying this car insurance for the last 20 years and I never wrecked my car. No, you'd be thrilled that you never wrecked your car. And so likewise, I think if, you make it to a ripe old age, I don't think you're going to be sitting there going, I paid all that money in term insurance and I don't have anything for it. Like no, you had that coverage when you needed it. Okay, so then there's all the different permanent policies. And yeah, there's an advantage there in that those policies will last until the day you die, right? Generally speaking, I think there's a couple like real small exceptions, but generally speaking, if you do a permanent policy, then it will remain, in effect, 20, 30, 40, 50, 60, 70 years, whatever. So in a sense, your loved ones are guaranteed that death benefit. So, at first glance, you're like, oh, well, clearly that's the better option. And maybe it is for your particular situation. For instance, let's say that you have some health issues, right? And you get a 20-year term policy, but then at the end of those 20 years, you decide, I actually want to get another 15 years of coverage. Well, if your health has deteriorated, you may not be able to qualify for another policy. Whereas if you had that permanent policy, well, it's not an issue, right? Because you're covered. It takes you out that whole length of time. People often try to sell you a permanent policy as part insurance and part investment. Now there is some truth to that, right? Each month when you pay your premiums, your monthly payment, a portion of that is going to the cost of insurance, right, to keep that policy in effect. And then a portion of it is being invested by the insurance company, and it's building up what is known as cash value. And that cash value is something you could take a loan against, or you could add it on top of the death benefit. And I'll cover those specifics when I talk about all the various types of permanent policies in another video. But just know that in my opinion, the problem with this approach is, well, they're the middleman. they got to take a cut of that, right? And the policy costs insanely more expensive, right? So before I learned about any of this stuff, someone had sold me a type of permanent policy, and I think I was paying around $125, $130 a month, and it was only $100,000 death benefit, which, you got a mortgage, you got kids, you know, wife and all that, like that's not gonna scratch the surface in terms of what you need. So now I got rid of that policy, and I now have a 30-year term policy, and I have $1.5 million worth of coverage, and I'm only spending, I think, 90 bucks a month. You know, so think about that. I'm spending like 30 bucks less each month or more, and I'm getting 15 times the coverage. Okay, so what that allows me to do is I can buy enough coverage to like actually protect me or protect my family, and then, you know, the difference, I can go ahead and, you know, put that towards my retirement account, or, you know, whatever other goals I have, because I'm not interested in having life insurance when I'm 70, 80 years old. You know, at that point, you know, my debts have been paid off, you know, my kids are out of the house and all that, you know, and my retirement account assets, you know, will be able to take care of my spouse. Now, there are some little nuances, right? You know, if you're a very high income earner and you're maxing out all your different types of retirement accounts, and, you know, there's some cases can be made, you know, but in my opinion, for the vast majority of people out there, and I'm with Dave Ramsey on this one, like just term insurance, right? It's the cheapest way to get the most amount of coverage during those critical years when you want to ensure that your loved ones are protected. Hi guys, if you decided that you want to purchase life insurance, that it makes sense for your situation, I'm going to throw some links down in the description, Policy Genius, you know, a few other websites where you can punch in your information, and they basically compile quotes from different insurance companies for you. So, you know, it's kind of a one-stop shop. You can you know, get 3 or 4 quotes all at once, and then, you know, choose what's best for you. Quick recap, guys. Purpose of life insurance is to provide for your loved ones, protect them financially speaking in the event of your death. It's going to cover things like your liabilities, right? Paying off your debts, replacing your income, paying for final expenses, and potentially covering education for your kids if you got them. Rough rule of thumb is you want to purchase 15 times your gross annual income. So that's the death benefit you're looking for, 15 times your gross annual income. I'll put a calculator in the links below if you want to do a more detailed calculation. Okay? 2 main types of coverage: term or permanent. Okay, there's different types of permanent. I'll cover them in another video, but term policies a lot cheaper for a lot more coverage. All right, and in my opinion, vast majority of people should establish a solid base of term insurance to protect those critical years when you're starting off. You've got a lot more debt than income, most likely. You know, you've got the young ones at home, and you want to ensure that you're protected right off the bat. All right, guys, that's all I got today. I do want to say, if you don't have life insurance and you've got people that are depending upon you, please, please, please do the responsible thing, do the loving, caring thing, and go out and get some. I know it's, you know, it's not fun, it's not sexy like investments, you know, however, it's important, right? You know, you want to take care of those that you love, you know, and nobody really likes thinking about their death, so it's one of those topics that I think often gets kind of kicked down the road, like, think about that another time, but vitally important that you do this. So, as always, if you like today's video, hit the subscribe button, share it with a friend. Let me know if you got any other topics that you want me to hit. And until next time, see ya.